How did we look? Look okay. Give me an audio check, please. Hi. Good to go. Awesome. Yeah, we'll wait a few minutes. We have just like 12 people in here, maybe 14. So the goal for today is very simple. We just wanted to have like a study group. We want to create a habit. So I figured we'd start with something that might be relaxed, not so serious. Although the conversation of investing outside of the traditional investing methods or venues is important. It's not very serious. Hi, hi, hi. Thank you. Oh, by the way, I have something up on the screen. It's not mandatory, but if you want to participate, the more the people, the better. I have a couple questions to ask, and I just wanted to see your answers just to make it fun. If you don't feel like doing it, you don't have to. It's just something a little fun to do. If it's just three people, we'll probably skip the whole thing. And today's agenda is very simple. Open the conversation for crypto for a lot of people. Probably some people have an idea what it is. Maybe I can help demystify it a little bit from the blue collar perspective. I call myself blue collar because I don't speak Wall Street, so it's not like I'm working with my hands. It's hands-on working. Like, I get it, and hopefully I can get people to get it as well. I don't want to drown everybody with technical jargon. I'm not qualified to take it all the way. I do know what the main stuff, uh, the main technical terms mean. So hopefully I can demystify it for a few more people. It took me a bit to get started back then when I first started looking at it. I didn't find answers, and I got general answers, like just generalities where it sounded like people were trying to answer and they didn't really understand it. So hopefully after years and years of investing in crypto and making a lot of money in it, I can tell you what I did, how I did it, where I do it, and not to recommend what I'm doing. By no means am I an expert, so let that be the legal disclaimer. Do your own homework, and it doesn't get any more risky than crypto. Okay, just I don't need to say it. It goes without saying. Okay, I'm stalling. Hi, I see a few new people. If you just joined, you want to participate and make it a little fun, scan the QR code or go to classpoint.app and use crypto02, the code, to enter the class. So what will that give you is if I ask a question, you'll be able to answer. And I believe you can also see the screen maybe a little better and take screenshots if you want to. Not that there's going to be that much to retain. Um, I see 6 people willing to play the game. I appreciate you. If you have questions, just put them in there. I'll try to keep my eye on there. Pradek will also help me keep an eye on there. And let's see, 19 people watching. So let's just jump in. We did promise 7 o'clock. It is 7:03. I'm going to shut the door. No, I'm not going to shut the door. I'll just jump in. Let's see here. I'll close that window. So I'm sharing my entire screen. This way I can move things in and out, and because it is a not very formal setting. Hi, everyone. This is the discussion about crypto for the real world. I stole some overheads from our last crypto class, but I did go through it and change some things maybe to explain things a little bit better. Okay. And DeFi, there you go. So the format's going to be very simple. My goals today, not so much as an agenda, is to introduce people to crypto. Some people don't have a clue what it is. Hopefully, we can get them a clue, and also exchange of what's the difference between an exchange and a wallet, and what is good and bad about either. What is a blockchain? I think I came up with a pretty fairly easy visual to explain what a blockchain. Also, maybe what's next after the blockchain or complementary to the blockchain, and what are the risks? Some of the risks, other than the obvious. Okay, are we ready? Okay, so we will jump in and we will look at the pre crypto finance, fintech. You've heard that term, finance technology. Okay, so we had the simplest form of finance, wires. Like if I wanted to send somebody money anywhere in the world, I can do it electronically via wire. So let's see, this is the first place. The first wire I did, I felt like, give me your answer. The 6 people that are in the room or 8 people in the room. The first wire I did, or I never did a wire. Say whatever you want. I'm collecting your words. I felt weird. I felt scared. I didn't know what to do. I don't know what a wire is. I've never done a wire. Just tell me anything. Uh, and I'll tell you what I felt. I did delusional. I did hundreds of wires in my life, hundreds. In a prior life, I used to do a dozen wires every Friday for a lot of money because I had people I need to pay overseas, and the opportunity for mistake was very high. Cumbersome, yes. Doubtful, slow, yes. Do you have the? I have the confirmation number. Hesitant, yes, exactly. You send it, it goes into a black hole. Um, Confused. I definitely I had all of these every time I did a wire. And it's never easy. You have to call. Now you don't have to call all the time. Expensive, yeah, $30. I think $35. It's not expensive if you're sending a lot of money. It's expensive if you're sending $50. So I appreciate it. Slow, exactly. You never had to wire funds. Okay, for the person that said 29, get out of here. I'm jealous. The person that never had to, is this Zach? Never had to wire funds. Um, have you sent PayPal to anybody? So that would be like the next one. So you see all these words, there's doubt, right? There's confusion, uncertainty. It's a mystical process. I appreciate that. Mystical process. Close it. Okay. So as far as crypto finance, let's see if we can play the same game. Crypto fears. I want to see your fears, your concerns, comments. If you can think of benefits, let's go. Again, tell me words that you associate with crypto. Feel free to regurgitate what you've heard. Risky, yeah, buddy, it is. Jungle, oh yeah, it sure is. Those are two correct the correct adjectives, I guess. Rug pulls? No, now we're talking trading. Okay, I'll take it, but not the actual crypto so value. I get it. Lots of jargon. Yes, agreed. 100%. A lot of jargon. Confusing. Wild West. All correct. Opportunity to make or lose a lot. Yes, all correct. Nobody said fake. I'm proud of you. Oh my God. Nobody said fake. What did I miss? What just came in? Something came in. Risky, jungle, confused. Okay. So we get the point, right? We had more questions on the first one than the second one, which is maybe because you never delved into it. All right. So let's just jump in. Volatility, yes, I get it. So Bito, that is one way. All right, so let's look at the crypto world overview. You've heard of the term blockchain, right? Okay. Think about it as how do we log transactions? A ledger. So if you remember, if you're old enough, you had a checkbook and you logged everything. Everything has a number, and you wrote it down. On that date, I did this much to that person. It's an accounting ledger. Okay, so blockchain is just another way of keeping a ledger. We already use the concept, and we already use blockchain itself indirectly. If we use services that are electronic finance, we have used blockchain indirectly. Okay, so crypto, historical context, someone got the brilliant idea to make electronic money, an electronic asset that we can pass between each other. And the reason why it matters is They wanted to take it out of the hands of central banks, just like gold. In fact, some people say that crypto, like Bitcoin, is better at being gold than gold. I so agree with that statement. So we all can agree that gold is an investment vehicle. Do we not? There's no doubt about it. Everybody bought into it. We have billions of people that believe it. They either love it the way it looks or love it because it holds value. And maybe the two things are tied. What do I mean? The two things are tied. We love it and value and billions. So billions of people love it. So billions of people want it. Therefore, it has value, and the value should only go up because it's rare. You see that? Are we all on board with that? Okay. So Bitcoin, not billions of people love it, millions. And it's rare, even more rare than gold. There's a set number of them. So why wouldn't the value grow? It doesn't matter if you like it. I don't like gold, but I will trade gold. You see what I mean? I know that supply and demand will keep the value of gold going up. I know that supply and demand will keep the value of crypto to go up, especially Bitcoin. So if now only millions love it, can you imagine what happens if that number doubles? It's easy to double when there's not a lot of them. You can't double the demand on gold. You can't increase the demand on gold more. We have the same number of people to a degree. So you see the potential of catch up. So think about the catch up trade to gold as the ultimate carrot in investing in Bitcoin. And this is not my opinion. This is what the world is chasing. Have you heard of market cap? Feel free to ask questions, by the way. I'll try to keep up. Have you heard of market cap? So the market cap of gold is whatever it is, 12 trillion. I honestly don't know. 6 trillion. I should have looked it up. And the market cap of Bitcoin. At one point, it was over a trillion. It probably still is. So there's this discrepancy, and the gap will close and probably will surpass because of the fact that it's a lot more rare than regular gold. So the value of Bitcoin should never fall and disappear unless the whole technology disappears. It has too many fans to die and too few fans not to spike. Eventually, somebody's going to figure out that, holy crap, we need to catch up. We need to like it. And they start. Now, suddenly you go from 100 million fans to a billion. Whoa, imagine the value. I'll give you another way to value the price of Bitcoin in a little bit. All right. So why now? Like I say, before it's too late, it's not really too late. It's like, why not? Why not now? I hate not knowing, whatever it is. Whenever I hear a concept, I was like, what? This is going on in the world and I don't know anything about it. I feel embarrassed. So I start doing homework whether I want it or not. At least I want to understand it. This way, I will make an educated decisions why I don't want to participate. It's not for everyone. So not everybody buys gold. Okay, I do buy gold. I have gold. Therefore, I should buy crypto as well. All right, as far as coin picks, the coins is the easy part. Stay away from crap and stick to what you know, stick to the top 3 and move on. It's very easy. That's the easy part. So again, we have the blockchain. What is it? It's an accounting ledger. I'll tell you more about it in a little bit. I think I will demystify it for you well. Crypto is here to stay. I don't think it's going away. And crypto, Bitcoin is like gold. It's even better than gold at being gold. Okay. And why now? Why not? And the coins we'll get to, they're the easy part. All right, as far as trading, you have a platform. You've heard that term. You're familiar with it. You use TD Ameritrade, or Thinkorswim. That's your platform. You use tastytrade. That's your platform, right? Well, you have platforms for crypto. Some of them you know, some of them you don't. Coinbase. That's, I think, the largest in the US. Binance, I think, is the largest in the world. I use crypto.com. I'm not recommending it, but so far, so good. It's still not out of business. Okay, so you have platforms to trade. You know how they tell you your money is not yours unless it's in your own wallet. Well, your crypto is not yours unless it's in your own wallet. Well, in reality, so are stocks, but that's, they're all guaranteed in the US. So the wallets are private locations where you actually can take your coins and store them. Okay. So kind of like take your money home. You buy something, you buy Bitcoin through Coinbase, and then you send it to your own private place, your own private wallet. They come in different shapes and form. But this way, you send it away from the broker, the platform from which you bought the coins, and then you send it to your own private wallet. No one has access to that wallet. No one. And if you lose your own password, you're toast. It's gone forever. And it's a complicated piece of paper. And every time I think about it, I get a hot flash. I know where it is. I know where the backup is. I still get the hot flash because if you lose that piece of paper, you're done. You don't know how to log. There's no one to restore your password for you. Correct. So don't lose that piece of paper. It's usually 20 words. You got to put them in sequence. Okay. So you got wallets. With coins, quality matters. Stay away from shit coins. The prestige is Bitcoin. It just sits there and looks pretty. It doesn't do anything. Okay. But what would Bitcoin do? That's what's going to happen for the rest. Let's say you have a thesis on whatever coin you want, Solana. It's not going to play out to the upside unless Bitcoin is also not falling. So it may outperform Bitcoin, but it needs Bitcoin to be moving in one direction or another. That's my observation. Somebody might have an issue with that comment. I challenge it, but that's my observation. If Bitcoin is falling, no other coin is going to rally sustainably. Okay. So think of prestige coin, that's Bitcoin. Shit coins, avoid. Functional coins, those are the smart investment where you can jump ahead of the game. I'll talk a little bit more about those in a little bit. You have Ether, that's the king functional coin. The king because it is the dominant network. So when you create a transaction, when you send a coin from one place to another, most likely you're going to use the Ethereum network. Therefore, you're going to have to pay fees in the Ether coin. Ether. And Solana is a competitor to Ether, also a processing network. XRP, another one. Cardano, another one. And they keep coming up as I go. Yeah. And then there are a set of coins called stable coins. USDC is one. That's where I store a lot of cash. It's the equivalent of $1, but it's a crypto coin. So I can stake it and collect interest. I can put it to work. All right. So quickly, the word on wallets. The wallets, basically where you store your money. Why are wallets important? Where you store your money is the riskiest part of crypto investing. Like I put my money in crypto.com, and if I don't move it into my own wallet, they could disappear any day. I don't even know who to call wherever in the world they are in order to get my money. So I'm putting a lot of faith in crypto.com if I keep it there. It's very convenient, but I'm putting a lot of faith. So I can send it to my own wallet. It's impractical if you're an active trader because the fees will accumulate. But if you're dealing with a large sum and you send it once in a while and you move it this way once in a while and you stake it once in a while, that's good. But if you're active, it's pretty expensive. So then you weigh the pros and cons of the amount you're dealing with versus the safety that you will get. The bigger the amount, the more important to go to private wallets. Avoid the too good to be trues. What do you think about Robinhood as crypto platform? I don't like Robinhood for anything, but if that's the only way you can do it, do it. It's probably expensive. Tasty Trade at one point did crypto. I don't know if they still do. We should look into that. PayPal, I think, has some. I think you need to keep crypto to crypto people. So anybody that tells you they have a safe broker, you should say, nah, There are no guarantees. I use crypto.com. Don't use Qcoin. It's not available in US. It used to be. I should update that. I have an account. I can't log into it. I don't think there's much money in there. It's like $200, I think. Um, I've opened accounts in almost all of them. I'm only funded two. Qcoin for a minute and I hated it, and crypto.com, I logged into it. I didn't love it, but I definitely felt more comfortable than the rest. Qcoin was a casino. So crypto.com still has pop-ups and things like that. The good thing about crypto.com, they allow me to do up-down options, which is basically binary options. They have two forms of them. Pretty cool. If you know charts, you can make $50 a day like this. You basically bet for a period of time which level would come first. So if you know options and you have a good charting software that can chart short term, you can sell the equivalent of an iron condor of sorts. What are the cons of using Bito to invest in Bitcoin? Okay, excellent choice. So Faye is asking, you're familiar with Bito. Bito is a ETF that tries to mimic Bitcoin. So if you read the prospectus, they changed it a couple of times. I think the spirit of it is they trade Bitcoin futures and to try to mimic the price of Bitcoin. So you're not actually accumulating coins, and it's not decentralized because it's in the hands of regular money. It's like a stock, right? So the pluses is that so far when they are doing well, when Bitcoin is rising, they're paying an incredibly fat dividend to the point where if you've owned it for about a year, I bet you it's free. Because if you've owned it for about a year, you probably paid under $15 a share, and you probably have collected just as much in dividends. So that's the advantage. The disadvantage, you're not hedged, you're not away from the central government. So it doesn't serve the purpose of divesting your investments. So it's not decentralized. It has pluses and minuses. Better than nothing. Wallets, you have hardware wallets, you have software wallets, you have paper wallets. I've never seen paper wallets. I don't know how to use them. I've seen software wallets. That's what I use. It's a DeFi app, and you can have it from anybody. I have mine from crypto.com. I have two. One is from crypto.com. Physical drives, some of them like Trezor and Ledger, they will give you a physical drive. They're snazzy looking. So pick and choose whichever you prefer. Okay, so Jerem has feedback on that the list of coins is not that great. In crypto.com, I haven't seen any restrictions. The only restrictions that I can remember are I think DAO was hard to get, and XRP was impossible to get for a little bit, but now it is. Okay. So now you're going to have, I tell you what, though, you know what's going to be the best contributor to the value of Bitcoin going forward is Wall Street. So you've heard of the ETFs that they just brought about. So now they have a way of making money off of Bitcoin on Wall Street. For example, if you go to JP Morgan now and say, I have $3 million I inherited, help me manage my money. They'll say, sure, yeah, we'll put this much in real estate, this much in stock, this much in bond, this much in gold. And why don't we put 1% in Bitcoin? I'm just saying. So, because now they can give you that option without having to open a crypto account. So, how is that important? So, the asset allocation component could be huge to the price of Bitcoin. Let's say they say, we'll give you, why don't we put 1% in Bitcoin? You can extrapolate a value of Bitcoin that's over 150,000 to 250,000. It's all the available assets times 1%. Cut it in half, you'll come up with probably 120,000. So I'm not a woo, let's go to a million type of guy, but I'm a guy that says it is more likely to go up than down over time. So there's a guy called Michael Saylor, the MSTR. I don't know if he's the founder. He's the CEO of MSTR, MicroStrategy, I think. They ask him, how high do you think Bitcoin can go? It's like a stupid question, really. It's innocent. It's an innocent question. Well, how high can gold go? Who can answer that? So his answer is perfect. I love it. Well, if it's not gone, it's a million. He doesn't say it's going to a million. He's just telling you it's going to keep going up with time, just like gold. It's going to keep going up with time, which means what? Which means your strategy should be accumulate, hopefully on dips, accumulate. Okay. So let's rewind the clock. September, October 2021. If you remember, you saw me do a couple of videos. Crypto is looking for a crash, maybe even down to the low 20s. Crypto was in the 60s. So I said I would be out of crypto and I would load up at the bottom. And that's what happened. Over a short period of time, crypto collapsed and we went long at the very bottom. So I didn't plan it that way, but that was my second wave of crypto. Was huge. So I loaded up and then I exited near the top, not perfectly at the top, except for a core position. So I bought the dip, so to speak, got my money out, and now I own a core position that is YOLO money. In other words, I got my risk out, and now anything I use from inside that account has been paid for. Doesn't mean I'm reckless. It means the next time we correct, I can go all in and not have to nail it and not worry about it much if I'm in it for the long term. Now, the alternative would be to just keep buying at a systemic pace. Like you say, every month I'm going to put $200. And you can just put $100, $50. You can buy a portion of a coin. You don't have to have $60,000 to buy one Bitcoin. You can buy X $100 of a Bitcoin. Okay. So another term, I took a side street here. Another term is the NFT comment, the tokenization. That's another way Wall Street may be going into the back way, into crypto. Like so far, they hate it, right? You've heard the chief of the best bank in the world saying it's crap. The chief investor of the world, Warren Buffett, it's crap. His friend who just died, it's crap. How is it crap, people? It's like the best performing asset of all time, probably. Anyway, at least of modern history. So they're going to have to eat their words. The back door to it is through tokenization. So what is tokenization? Simply stated, I own a building. I want to sell it off in pieces. I break it up into 10 electronic pieces and I sell off to 10 people. And it's a rental unit. It has 100 houses and it produces 100,000 a month. You buy 1/10 of you buy one token, you buy two tokens, then you share into the profit of one token or two tokens. So this way, I don't have to sell a real estate. It's tokenized, and I sell my tokens. And at the end of every month, if you own two tokens, you get 20% of the rental income. That's one silly way of doing it. You can tokenize anything. You can tokenize a moment of time. So as long as it's logged, it's official, you own it. Okay, hard concept, but when you break it down to, say, a business or a building, it's not so hard. A piece of art. I can't own the Mona Lisa, but I can own 1/1000th of the Mona Lisa. I'll buy a token that is 1/1000. So say, hey, I have an art collection. I have one token of the Mona Lisa. I'm just making it up. But think about it. Okay, think about it. Even Ozzy Osbourne got in on this. He tokenized some moment in time, and he said, "Okay, you guys own it. You can tokenize a collection of music, a piece of art, a building, a business, anything, a collector's item." Okay, so tokenization is probably the back entrance into the crypto world by these big banks where they don't even have to eat crow. All right, let's get into the fun stuff. Blockchain. You know the wire transfer. The blockchain is a ledger where you have transactions and you log them, right? That's a ledger. You have transactions and you log them. Well, the ledger from the blockchain is superior to the old ways. So I say the wire transfer. So if you've never sent a wire, the way it works, the way it works, you you send the money, it goes out of your account, it disappears. It's in your control. Once you send it, it disappears out of your account. It goes into Swift. That's the network that transfers the wire. So no, you no longer see it. Your bank no longer sees it. Swift has complete control over it. And then when Swift deposits it in the receiving bank, they no longer have it. You no longer have it, and the other entity has it. So the process has many areas, blind corners to somebody. Okay, so it's not transparent. One entity controls it at every point in time. Plenty of places for error and theft. Not ideal, right? That's the traditional one. Okay. So, what about the alternative? How is blockchain different? It's decentralized. So, there's not one entity at any point in time that controls it. Okay. It's transparent ledger throughout the whole process. The entire network sees it at all times. So, the loopholes are few and far between. And accountability, I mean, transparent. There are no hidden corners. It's not blind to anyone. People say, "Oh, it's a lot of crime because you can't track it." You absolutely can track it. And crime, really? So crypto is a lot of crime more than cash. Have you seen people pay by check? No, everybody wants to commit a crime. I'll give you 10 grand for you to do this. I buy drugs with cash. You go solicit whatever, it's cash. Nobody's paying with electronic format. So the only thing that facilitates crime in crypto is the transportability of large amounts. So you make it possible to commit crime and move it more efficiently. Like if you want to pay somebody with gold, it's heavy, you can't move it. If you want to pay somebody with crypto, it's easy. You can move millions in an instant. So yeah, transportability makes it easier to commit crime across borders, for example. But crime happens with cash. So I don't think the crime thing is a deterrent. All right, so let's look at the structure. The structure, they're blocks. The blockchain, the ledger is structured in blocks. The blocks are sequential, they're numbered. Okay. There are different ways that these get done. The POW, POS, POH, you may have heard those. It's the proof. You gotta legitimize the transaction, right? So different networks have different methods. Ethereum, you like that, Rini? Ethereum used to be proof of work, which was inefficient and clunky, power hungry, as they say it. Consumption of power is important. So I think what did they call it? The merge, whatever they called it. They moved away from proof of work, and they went to I forgot, proof of stake, and a combination of proof of stake and proof of history, maybe. Anyway, so proof of work, proof of stake, proof of history. The more efficient, the better. XRP has something different. I forgot what it's called. PIRA or PCRA or something like that. Specific to them. XRP has a lot of buzz around it. So I own some of it and I'm never going to sell it. I sold enough to be free and I'm never going to sell it and see where it goes. Solana, I think, is proof of history, which is very efficient. And so everybody has a little niche. Okay. So it's important to know what technology you're investing in. I forgot what Cardano is, but I ditched it a long time ago. All right, so use cases. Who uses this stuff? We do already. We don't know about it, but trust me, you already use blockchain. In fact, there are companies, like I know for a fact that there's a company, I forgot what it's called. It's like Twitter, where you can send messages back and forth, or it's a messaging company where you put $50 in and you never run out. But every tweet or message you send is transported by blockchain tech. So no one can stop it. Everybody sees it and nobody can stop it. And so you can say whatever you want, even break the law, because nobody can stop it, right? And it uses blockchain. So you use that $50 in pennies at a time to move it from one place to another. Forgot what it's called. So healthcare, very important. Web 3.0, you've heard of that. The electronic IDs, communications, it's already everywhere. The NFT system, I believe some games use it as well. Okay. So you basically use it to record or to verify and track anything, anywhere, without having a central bank, a central entity that controls the whole thing. That's the whole thing. The banking system, the transactions between banks is centralized. Money is centralized. This is not. So that's why it's like rebellion. It's like the rebellion. So let's put a visual to it. I know it's like, oh, blockchain, what is that? All right, so here's a block. Block number 1, hash is 000. Alice sends 1 Bitcoin to Bob. Hash number, okay? This is a placeholder, the 000, the starting point, and then you get a hash. Transaction number 2, the ending hash of this one would be the starting hash of the other one. Bob sends half a Bitcoin to Charlie. That's a new hash for that. Block number 3, you carry over to here. Charlie sends 0.2 Bitcoin to Dave. That's the new hash. Let's say Alice buys a Bitcoin or piece of a Bitcoin. That's the new hash. So I asked, I was curious, like, how could it be hashes? Are they unique? Mastodon, is this unique? And they said, for all intents and purposes, they are, even though mathematically they're not. So you could have 2 hashes, but the likelihood of them intersecting in this massive world of crypto is negligible. So effectively, they are unique, even though mathematically they are not unique. That scares me, but that's how they say it, so I'll trust them with it. So general information, blocks are sequences, okay? And the hashes are not effectively unique. I mean, they are effectively unique, but they're not unique. I misspelled that one. And there's always a trail. You can't mess around. Oh, and by the way, there are other things that keep coming in. Like you may have heard of a DAG, directed acyclic graph. So I said, okay, what the hell is this? It's basically, I don't know if it's an alternative. I think it's a complementary effort in order to keeping the blockchain going. And it's a number of nodes that are not in serial. So think about it as a network of nodes. I gave it a visual. And I don't know a lot about it, but I know that you may be hearing about it, or it may try to make itself as a replacement, but I don't think it is. I think they work together. We'll see how that works. I'm pretty sure I've seen this term fly around Instagram at places. So if you've seen it, now you have an idea of what it is. You can deep dive into it. And if you learn something, we will get together about it. All right. So I don't want to be a complete talking head. How much time did we put for this? 40 minutes? Did we put 45 minutes? Because we were already here for 40 minutes. Does anybody have any questions like right now? Yeah, Jerem, that XRP thing. Because the rest of the presentation is more like addressing the fake argument. Is it fake? It's made up, but so is everything else in this world. Everything we make is made up, right? Besides, we buy fake stuff all the time. There are websites that sell fake shoes, and they're $100. Why would anybody pay $100 for a fake shoe? Because it has value to that person. And that's the point of this overhead. Fake or not, does it matter? The Mona Lisa is made up. Somebody made it up. And you can buy reprints of it. You know it's a fake, yet you're paying $50 for it. $50 for a fake Mona Lisa. Why would you do that? Because it's worth it to you. It's worth it to you. That's the point. And the rarer it is, the more worth it has to you and your friend and his friend and her friend. You see what I mean? Okay. So if you can get over the hurdle of it's fake, who cares? It could be poop, cow patties. Oh, look at the shape of this one. Flop, nice. I like it. If 100 people are like you, that piece of poop has value. So who cares what it is? You see, it's ridiculous, but it's the concept. Okay. There's a question. What do I think of Doge? Shiba. Shiba, I wouldn't touch. Doge actually has, it's a shitcoin in theory, but it actually has an it has a world. Like there's a bunch of people that actually trade Doge back and forth, even for services. So I wouldn't do shitcoins. Shiba doesn't do anything. But if you love it, then just don't consider it an investment. Just consider it that something you like. Dogecoins, you can probably ask 10 people about Doge. 2 of them will have a story that one of their friend became a multimillionaire and then didn't cash out and then they lost it all. I guarantee it. And they will mention Elon Musk. So I made money with Doge. I don't think I've ever lost money with Doge. I had a trading path. I can't remember. I buy it at 6 cents. I sell it anything above 9, something like that. What is the halving? Okay, the halving, great question. I forgot to mention the halving because it's not in the news anymore. So the halving is some people think that they cut the value of Bitcoin in half or whatever. No. Or they cut the available coins in half. No. What they do is they cut in half the reward that you get for mining Bitcoin. So let's say there were 1,000 people mining Bitcoin and they were all getting rewarded that much. They cut that in half. Therefore, 200, 300 of the 1,000 people say it's not worth it for me. They stop. The reason they created that system in there, and it's built in every 4 years, it's automatic. The reason why they built that in is to mimic gold. It gets harder to mine gold. You're running out of gold. So they want to make it harder to mine Bitcoin. That's the way I think of the halving. They cut the reward they pay for the people mining. Sure. That's a pretty cool question. Completely forgot about it. Okay, let's look at the coins. I like Solana. I made the most money out of Solana. Solana is a transaction. It's a network that competes with Ethereum. The value of the coin fluctuates a lot. I bought it as high as 170. I bought it as low as 10. Luckily, the biggest chunk I bought at 10 and 12 and rode it all the way up to 208. And not all of it out of 208, but it was a hefty win. Ether, my lowest purchase was 1,000 to give you reference points, and I forget what it is now, 2,500. I sold it at 4,400, 4,300, and kept my core position. And it also is free. XRP, I bought it at, to be honest, 44 cents, I think. And I haven't sold. I sold a little bit when it spiked, and I think 70, speaking from memory. But I have it at 44, and I'm not worried about it. I have a lot of USDC because that's where I park my cash. It tracks the dollar. As long as the company doesn't go bankrupt, and I did have a hot flash in 2023, March, it broke the dollar. What does that mean? It came down to 88 cents. And I have a schmut ton of it. So it was a hefty sum. Why? Because when whatever the FTX went under, whenever not FTX went under, SVB went under, one of the backers of USDC, I think there are 8 banks, one of the backers had money in SVB. And the rumor was that they had their money in SVB. In other words, their entire cash in there, and they didn't. They only had 25% of their money inside SVB. And so for a second, they thought that USDC was going to fail because one of their backers is bankrupt. That wasn't the case, but that was a good hot flash. So safe? Nah. Here's the good news. All these coins, I have them locked in a process called staking. Proof of stake. So I tell people, I'm not going to take my money out of your platform or out of my wallet. You can have this money to put it to work, to make money for yourselves, and they'll cut you in on the profit. Think of it as you create interest. by locking your account in a CD. Same concept. You get paid for locking your money so they can use your money without worrying about you having to draw it out. And the cool thing about it, it's 3 months at a time. Oh, I have a coin called CRO, which is proprietary to crypto.com. That's their coin. It went to, like, it collapsed because banks were failing. It's a bank. The whatever, the broker, and like FTX went to zero, so the value of CRO went I didn't own any, and I just loaded up. I figured they have my money already. If they fail, my money is gone. Might as well bet on their coin. So I bought a lot of their coin for nothing, and then it recovered, not to the top, but it recovered nicely. So I said, you know what, this is free money here. I locked it at 20% for a year, 9 months or a year. I figured that was a good deal. 20%. That's a great deal. Where are you going to get 20% on your money? And it's a good sum. The other ones are between 2.5% and 4.5%, and every yearly rate. And every 3 months it expires. The term ends, and I restart the term. I just restarted some USDC. So I have cash parked in USDC, and I always leave a little bit free so I can just do transactions. And the rest are all locked up. So I'm not tempted to trade in and out of them. All right. I think that's about what I want to cover today. The last, this is like, hey, keep on investing. So the best way to think of crypto, I think, if you just get started with a few $100, not necessarily, to get rich or anything, just a few $100, get started. Why not? Why not? It is risky. Don't get started if it's your last $200. That would be silly. You should expect that it's money lost. And then once you get comfortable with the process, maybe you venture out a little heavier and you get a strategy going. Here's something fun to do. Crypto.com, I'm not recommending it, okay? But if you open an account, it's pretty quick. And they do work with the IRS, so you can't hide income from them. You have to report your income. And unless you're an active trader, they probably don't report you. I think it's 200 trades a year or $20,000 a year, something like that. Anyway, so I get reported, and I have to report my income and losses just like any other platform. Talk to your CPA about that. But the cool thing is that you can actively trade with up-down options. So you know how we do $50 a day with Iron Condors? You can have something like that. If you have good discipline and good charting skills. If you do not have good charting skills, don't try to do up-down options. It's just gambling. You will get hooked on it, and you will lose more than you win. But if you know your charts, and if you do harmonics and you do wolf waves, it's pretty hard to lose. And it's fun. You're not going to get rich, but it's fun to make $100 or $200 a day. You can do more than 10 contracts and risk more and make more, but I keep it small just for fun. All right. Any questions? We've gone longer than I thought. 50 minutes, 48 minutes. Anybody has any questions? I appreciate you. How many did we have? 30 people. Oh, wait. Anybody that's thinking about signing up for the options event, please do sign up. The options event. It's in the middle of September, 2021, Orlando. simplestocks.com/active events, or click on the thing that says events. Sign up. I have 8 more spots. 7? Somebody signed up earlier today. 7 or 8 spots. I know some of you are waiting for the last minute. If you're in Vegas, you have a discount. Your discount runs out tomorrow or 2 days from now. Don't forget. I am great. Bill, thank you. I try. I'll be hunting bears in Washington. Oh, geez, Louise. Black bears, I hope. I don't think they're endangered. Whoa, tough guy, Dimitra. You're welcome, Faye. Thanks for playing, those of you who signed up for the app. I love it. Okay, folks. I'll see you in the live tomorrow. Time to go walk the dog or something. 5, 4, 3, 2, 1. Peace out.